Hi, welcome to Konexio Technical Insight. I am Rahul Randeria and I will be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns, and the derivative analysis of Nifty, Bank Nifty, as well as the different asset classes. Now, first of all, the general disclaimer: this video is just for an educational purpose. Consult your financial advisor before investing. Now, first of all, let us discuss what we have mentioned in our last video. In our last video, we have mentioned that markets have already entered into overbought territory because 4 weeks at a stretch before last week, Nifty, Bank Nifty, and Fin Nifty has already rallied sharply. The rally was a 90-degree move, and some sort of tiredness and exhaustion was seen at the higher levels. As well as in the oscillators front, specifically RSI has given a negative signals at the higher levels, and we have been cautioning in our videos that one should try to book profits, one should avoid going long and wait for some sizable correction or some decent correction before entering long. And we had a view that one should book profits at the higher levels and wait for market to get stable. So last couple of trading sessions, we have seen the market has been under pressure, and on the hourly charts, it has been forming lower tops, lower bottoms. So the momentum for the timing seems to be under pressure. So now let us check out the global charts, specifically the US charts, and then we'll discuss the Nifty. So now let us go to the US daily charts, that is Dow Jones. So we can have a view that what could be the trend in the US market, as well as what could be the effect of this global market trend on our Indian markets. So this is the Dow Jones daily charts. You can clearly see that Dow Jones has broken the rising trend line. It has been correcting since last 4 trading sessions. Yesterday, specifically on Friday, it has formed an inverted hammer. You can clearly see a long shadow on the upside and a body on the downside, which is clearly indicating that the momentum is slightly negative in Dow Jones. You can here clearly see the RSI. See, I have stretched the RSI. You can see the sell signal on the very top candle, and you can see after that the market, US market has started correcting from those levels. I would consider this is just a healthy correction because you can see from maybe 32,500 to 35,700. Dow Jones did have a correction, uh, and what we have not witnessed in last couple of months. So this is some sort of correction in the upward trajectory. And again, if I stretch the charts, you can see Dow has already given a breakout from a long consolidation. Let me bring it to the weekly charts. You can clearly see this particular was the major resistance area, specifically 34,700, which was not breached since April 2022, and that was breached in the month of July. So this is a very good signal that after a long period, Dow Jones had broken 34,700 mark. It has rallied, and after that, this could be just a pullback on the downside. So most probably, yes, the trend seems to be slightly weak in Dow also. So maybe couple of 100 points, maybe 300 points, 400 points correction in Dow Jones cannot be ruled out from these levels. So what could be the impact on Indian markets? So now let us check out the Nifty daily charts. Now this is the Nifty daily charts. You can clearly see Nifty since last maybe 15 trading sessions has been making lower tops, lower bottoms in this particular falling channel. It has taken the support. After that, on Friday, it has tried to trade positive. It did trade positive, but it was lacking the follow up buying. You can clearly see it was lacking the follow-up buying. It opened on a positive note and then traded sideways throughout the day. Let me put hourly chart so that on what we can observe that what has happened on Friday. Let me put a 30-15 minutes charts. So on Friday, this is the data of Friday. It was a flat market. Let me put a 1 minute chart so that we can have a very clear view that what has happened on Friday. So after opening uh, opening positive. You can clearly see market remained in a range bound throughout the day and ended on a slightly positive note with lack of follow-up buying. Now, if we compare to the US market has ended on a negative note and Indian markets had ended on slightly positive note on daily charts, but on the weekly charts you can see a red candle with a lower shadow. So there are chances that next week market might or Nifty might trade in this lower shadow. The range of this lower shadow would be 19,550, 19,550 on the upside, and on the downside 19,300 mark. So maybe next week Nifty might trade on the downside if there is a slightly positive opening in the next week. So friends, now let us discuss the important support and resistance level in Nifty for the next week. The first support in the Nifty is placed at 19,423 is the first support. Below that, the second support is placed at 19,296, and below that, the third support is placed at 19,189. These are the important supports and resistance level in Nifty for the next week. Whereas on the upside, the first resistance in the Nifty is placed at 19,678. Above that, the second resistance is placed around 19,795, and third resistance is around 19,887. These are the crucial supports and resistance level in Bank Nifty. In the Nifty for the next week. Traders should try to just watch out these levels. Uh, on the if there is a positive opening, one should wait for Nifty to uh, indicate some sort of weakness, and if there is lack of weakness if there is a lack of follow buying and there is losing of momentum, then one should again try to go short at those levels. Now friends, let us discuss the derivative data of Nifty calls. You will see on the screen in Nifty daily calls, the action was seen in 19,600 calls, 19,700 calls, 19,800 and 19,900 calls. Now here you can see the percentage change was slightly positive, nothing great. Uh, Implied volatility was between 7.77 and 8.78. There was a rise in the open interest, rise in the volumes. There is no shedding at all. Uh, but as I said, on immediate basis, you can see the volumes and uh, the open interest, rise in the open interest. The concentration is at the strike price of 19,600. So if Nifty breaks 19,600, if it closes above those levels, then only we might see the extension of rally. Closing above 19,600 is a must. If it breaks but doesn't close above those levels, then that rally could fade out and we might see follow-up selling coming in at the higher levels. So one needs to be cautious. Those who are long should try to book profits at the higher levels. So 19,600 could be the crucial mark in Nifty. If it crosses and closes above those levels, then only we might see a rally towards the level of 19,800 to 19,900. So friends, now let us analyze what we can observe in the or what we can analyze in Nifty puts. In Nifty puts, you can clearly see there has been a drop in the option premium. There has been a rise in the volumes, rise in the open interest. Implied volatility is between 9.61 and 11.94. Yes, implied volatility slightly higher, not in a danger zone, but it is slightly higher. But looking at this particular drop in the open interest, we can say that uh, the smart money might have or might be uh, writing out of the money puts. So maybe 19,200 could act as a strong support from these levels. And if it breaks, then 19,100 could be the major support area. Looking at this particular data, we feel that slightly, uh, if there is a gap up opening, then we might see the implied volatility going into a danger zone, and after that we might see selling pressure coming in at the higher levels. So on the downside, immediate basis, looking at the volume and open interest concentration, 19,400 could act as an immediate support. If Nifty breaks those levels, then there are chances that Nifty might slip down to the levels of 19,200. So overall, looking at the global charts, Nifty chart and Nifty derivative data, we have a, a view that Nifty might see some sort of selling pressure coming in at the higher levels, and those who are long should be cautious and try to book profit at the higher levels. And if Nifty breaks uh, at least Friday's low, then one should try to go short from those levels. So now, friends, let us discuss Bank Nifty daily charts, and we'll try to analyze what could be the trend for the next week. In Bank Nifty daily charts, you will see on the screen. In Bank Nifty daily charts, you can see Bank Nifty has already broken the rising trend line. It has already entered the support zone. This is the support zone, but still on the weekly charts, you will see that the candle is slightly weak and the shadow is long. So maybe possibility that Bank Nifty might trade in this lower shadow. If it breaks 44,279, then further sell off towards 44,000 cannot be ruled out. As of now, Bank Nifty is trading around 44,879. So if there is a gap up opening, because still RSI is in sell mode on the daily charts. So if there is a gap up opening, and looking at the global markets, we feel that on the upside we might see selling pressure coming in. Why that is possible? Because let us see the daily charts. You can see this daily charts. It is a high wave candle. Bank Nifty tried to trade higher, but uh, on the 5 minute charts, you can see that particular uh, gain was already given up on the upside in the second half after 12 p.m. on Friday. So this is some indication that the short sellers or call writers might be aggressive at the higher levels. So one need to be cautious at these levels, and the view is still slightly weak. So one needs to be cautious. Should try to book profits if anybody is long in Bank Nifty at these levels. So, friends, let us discuss the important supports and resistance level in Bank Nifty for the next week. The first support in the Bank Nifty is placed at 44,520 is the first support. Below that, the second support is placed at 44,279. Third support in Bank Nifty is placed at 44,044 on the downside. On the upside, the first resistance is placed at 45,118. Above that, the second resistance is placed at 45,471, and third resistance is placed at 45,804. These are the important supports and resistance level in Bank Nifty. Traders should just watch out these levels and trade in the direction of the trend. As of now, the trend is slightly weak. Bank Nifty might also face some sort of lack of buying at the higher levels. So those who are long should be cautious on Monday and try to book profits. And those who want to short, they should wait for Bank Nifty to start losing momentum. Once it's starts losing momentum, then one can go short in Bank Nifty from those particular levels. So view is slightly weak at this juncture. So friends, now let us analyze the Bank Nifty derivative data or Bank Nifty calls. In Bank Nifty calls, you will see on the screen the action was seen in 45,000 calls and 45,500 calls and 46,000 calls. Now here you can see the percentage change. The premium. There is a positive change in the option premium. Implied volatility is between 9.21 and 11.91. There has been a rise in the open interest, rise in the volumes. There is no shedding at all in the change in the open interest. So looking at implied volatility and positive option premium, we feel that Bank Nifty might open with a positive gap on Monday on immediate basis, purely on the basis of volumes, open interest. 45,000 to 45,100 could act as a major resistance. If Bank Nifty closes above 45,100, then only there are chances that Bank Nifty might rally towards a level 45,500 to 45,800 odd levels. But at this juncture, 45,100 might act as a immediate barrier from these levels. So friends, now let us analyze Bank Nifty put data. In Bank Nifty puts, the action was seen in the 44,700 puts, 44,400 puts, and 44,000 puts. Now here you can clearly see two main important things, which is implied volatility already under in a danger zone. Basically, 13 and 14 is not a danger zone, but in current low implied volatility, you can see the India VIX. It is near the lowest level. So in the lowest implied volatility, I mean to say India VIX, the implied volatility, which is between 13.54 to 14.30, could be considered as a danger zone. Now there has been a significant drop in the option premium, which is clearly indicating that smart money is already heavily writing puts, which is an indication that on immediate basis 44,700 could act as a very strong support because there is strong option writing, put writing. So this might hold till 44,700 days is sustained. If Bank Nifty closes below 44,700, then there are chances that Bank Nifty might drift down to the levels of 44,000. So looking at this particular data, the only positive thing which is the writing of out of the money puts and high implied volatility. But the global markets are looking weak. Rest derivative data of Nifty is slightly weak. Only in Bank Nifty there is strong out of the money put writing, which might uh, take a uh, take a pause around 44,700 mark. That could be a strong support if it breaks and closes below those levels. Then another maybe 700 points of fall cannot be ruled out after that particular level is reached. So one needs to be cautious. The primary trend is still positive, but as of now, some sort of cool off from this level cannot be ruled out. So, friends, now let us come to the final segment of our show, which is positional call. I've identified one stock from insurance segment. The name of the stock is New India Insurance. So, let me go to the daily chart of New India Insurance. Now, this is the daily charts. Now, if I compare the charts on the long term basis, you can clearly see from February 2022. From February 2022, the stock has been into a corrective mode. After that, July 2022, stock has started inching higher, making higher top, higher bottoms, but it is into a consolidation form. You can clearly say that it is a triangle formation. The stock is on the verge of a breakout from these levels. So the momentum is positive. So if uh, uh, the stock witness breakout, then we might see a rally extension or long rally from these levels. But the charts, the prices and oscillators are indicating that the smart money might have accumulated the stock. Stock is on the verge of a breakout. So those who are defensive investor, specifically I'm using the word defensive investor because is a this stock is a slow mover, but those who are investors can accumulate the stock maybe in the range of 126 and on corrections to 122 for an upside target of 150 in short to medium term. Short to medium term, maybe for 4 to 5 months because this stock is specifically slow mover. So those who are defensive investors or defensive positional investors can accumulate the stock in the range of 126 and on corrections to 122 for an upside target of 150 for short to medium term. So, friends, now let us conclude the show. Thank you very much for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.